Hello and welcome to the CNBC TV 18 special. I'm Shireen Bhan and we're in conversation with Michele Buck, who's heading Hershey's and here in India to launch the iconic Kisses. Michele, appreciate you joining us here and congratulations on finally getting Kisses to India.
Thank you. I am so excited to be here.
Well, let me start by asking you about what the India aspiration is. You came into India through a joint venture with Godrej that dissolved after a 4-year period. You're clearly aggressively betting on wanting to grow the India market. You've committed to invest 50 million over the next 5 years. So give me a sense and scope of what you have planned for India.
Absolutely. India is critical to our international business, and in fact, India is one of our key focal markets. We're really excited about the vibrant economy here, the fact that it's one of the fastest growing economies around the world, the growth in the middle class, and also the growth in disposable income. And as we look at the chocolate category in particular, it is about $1.2 billion in revenue, and it's growing over 11%. So we think it is absolutely ripe for further investment here for us. So we are committed to growth in this market. We have already established our Hershey's brand as one of the leading brands across multiple categories in which we compete, including spreads, milkshakes, chocolate syrup, and cocoa powders. And so we want to really further expand our presence in the market with the launch of Hershey's Kisses.
So where do you see the market expanding to? And specifically from a chocolates perspective, you've brought Kisses into India. What next can we expect as far as the product pipeline is concerned? And what kind of innovations can we expect, especially when it comes to pricing, to be able to draw in the Indian consumer?
Well, you can see that across our business that we have in India, we are already playing against within multiple categories. And we will further build several of our brands across our Indian portfolio, which include brands like Sofit, which we have as part of the Godrej portfolio, which offers a different benefit of better for you into the marketplace. And we'll continue to expand that as well as expand our treat portfolio. Certainly, Hershey's Kisses is our big launch this year. And as you look forward, you will continue to see us bring other launches into the marketplace.
You know, you talked about Sofit, so let me ask you about some of the legacy brands that came by way of that joint venture with Godrej. What's the plan? Do you intend to invest in some of those legacy brands like Jumpin, etc., or are there plans to perhaps divest some of those brands? What is the outlook?
So the Godrej partnership was a great way for us to really establish a presence into this marketplace. And now we are really focused on what we do best, which is marketing and manufacturing branded, value-added products. So we're fortunate that some of those brands that came with the Godrej portfolio continue to be important pieces of our current portfolio. Brands like Sofit, brands like Nutrien, and we'll focus on those, but we're very selectively focusing on those as well as the Hershey's brand across multiple categories. So you're going to see a big focus on Hershey's as one of our priority brands as we go forward.
So in terms of the competitive landscape, how different or similar is India to some of the other emerging markets that you operate in and have aspirations for? Brazil, Mexico? I mean, these are the other markets that you've identified to grow international operations. And what are the lessons specifically from a market like India that you take back?
So as I look at our portfolio of markets, certainly we have a big presence in the US and Canada, and those developed markets have some great advantages. We've been a leader in confectionery overall as well as in chocolate for over 125 years. So we know how to make quality, delicious products with very high standards. As we look at the emerging markets, they are an important lever of future growth for us. You know, we really aren't focused on Western Europe. We are focused on the emerging markets, and India in particular is really important to us given the vibrancy of the economy, the very strong growth that we're seeing in this marketplace. So certainly we are more establishing our presence here, and that's requiring investment. We've invested in getting the right talent in the market here in India. We've invested in manufacturing, and our manufacturing every product that we sell here in India, we are manufacturing right here in India as well. And so I think the differences are between the development of the market. I think the key similarity across all of these markets is the consumer. Consumers around the globe love treats, they love chocolate, and they love the Hershey's Kisses brand because it's unique. It is a delicious chocolate, it's a unique shape, And of course, it is delicately wrapped in a way with the foil and the plume that each kiss is like a little gift. And the KISSES brand equity really signifies for consumers sharing happiness and building connections with family and loved ones.
Well, we have a bunch of Hershey's Kisses right here on the table. But you know, since you spoke of making in India for the Indian market, let me also ask you about the aspiration to make in India for the rest of the world. I mean, could you consider exporting out of India, especially as far as some of the other emerging markets are concerned? And would you look at enhancing manufacturing capacity in India? You're currently operating out of one plant yourself that's in Bhopal, and you have 2 other contract manufacturing facilities. So what's the outlook like when it comes to enhancing your manufacturing presence here?
So we always look for the manufacturing strategy that's going to allow us to deliver the best product to consumers at the most efficient price, because that allows us to offer the best value to consumers. So we tend to manufacture products in whatever market we are selling them in largely. That is largely our strategy, and I would anticipate that to largely be our strategy going forward, though things can always evolve as the business grows.
You talked about the 125-year-old legacy that you're taking forward, and taking a legacy of that kind forward has its own advantages and its challenges. You know, I was looking at your transformation plan as far as Hershey's is concerned, and it is driven by brand, it's driven by product, and it's driven by what you intend to do as far as the channel is concerned. How successful do you believe that you have been? Because change is hard to drive. And what's next now as far as the transformation plan is concerned?
Well, certainly as a company, our vision is to be an innovative snacking powerhouse. And that starts with our confection business, because that is really our bread and butter. It is the bulk of our business today, and by virtue of being the #1 player in confection in the US, we are actually the #2 snacking player there.
But does it concern you that the chocolate business, especially in the home market like the US, is barely growing at 1%, whereas on the other side you've got the salty snacks category, the cookies category growing at over 6%?
So I think we have an opportunity to continue to drive that chocolate business as we have over the years, to continue the growth there, and we will continue to see growth in chocolate as we expand and capture some new occasions in other key segments of snacking. And then certainly the other opportunity we have with chocolate is to really establish our great iconic global brands in many of these emerging markets where the products exist perhaps through importing, but haven't been really marketed in an aggressive way to really make them highly available to consumers here.
So in line with the aspiration to be a snacking company, how much of this is going to be driven through inorganic growth? I mean, you've done that over the last 10 to 15 years, more recently with Amplify. You know, so is inorganic growth going to be the key driver, especially as you try and beef up the snacking portfolio, the non-chocolate side of the portfolio?
I would say not at all. Our growth strategy is dependent on both organic growth and inorganic growth, and I think both levers are critically important. We must grow organically our key business as we have, and we have a huge opportunity to continue to do that. Our large iconic brands in particular over the past several years have had nice low single-digit growth, and we want to continue that as we build the portfolio through acquisition.
What would be the gaps that you would think are critical for you to be able to plug at this point in time in terms of the offering?
In the U.S.?
In the U.S.
You know, I really look at our core capabilities. Let me step back for a minute and say, as I look across snacking and confection, our core capabilities are so highly transferable across the entire market. We really understand consumer insights around snacking. Our taste science capabilities allow us to deliver products that taste great. We have a strength in ubiquitous distribution and really understanding how to get our products everywhere, which is absolutely critical with snacking. And then as we look at our portfolio, I think we really look at all of consumer snacking occasion needs and say we want to service every single need. So we look at day parts of snacking. What are consumers snacking on in the morning, at noontime, in the middle of the afternoon, at dinner, in the evening. So really covering those day parts, and then also looking at consumers' interest in indulgent treats, in somewhat less indulgent, and all the way to better for you, and say, how do we really fill all of those need states and benefit needs consumers have, and all of that is a world of opportunity for us.
You know, in terms of the big changes that you're seeing, especially when it comes to distribution and on the channel side, I mean, you've got a chief digital officer in place as well to look at digital commerce. What are the big trends that show up for a business like yours?
So certainly e-commerce has been growing globally, and in the US, our home market, certainly categories like durables have experienced growth faster or sooner than the food category, but the food category is really starting to take off, and we see it as a huge opportunity as consumers are expending more of their trips in that e-commerce space. It's important for us to be very present in bricks and mortar, as we always have been, but it's a huge opportunity to capture that growth. And really the opportunity in e-commerce is not just to think about the way that our business sells currently today in bricks and mortar, but where are the new opportunities. For example, within our chocolate business, we have a big impulse purchase business with single serves, but online we're actually seeing consumers purchase a pack of 30 instant consumable bars. So it's really about instant consumption in their house. So we have a big focus on that. We've grown a nice business. We have very strong market share performance in e-commerce in the US, in China as well. So we're feeling good about expanding our business into that channel as we've expanded it across many channels over the years.
So since you spoke of the fact that it's doing well for you in the US and it's doing well for you in a market like China, would it be something that could perhaps be a growth driver here in India as well?
Absolutely. E-commerce is a growth driver in India, and our general manager here I know is very focused on capturing that growth. So I think it is a very nice opportunity here.
Let me ask you about the global competitive landscape, and do you believe that you know, we could see further consolidation, and is there really big ticket consolidation left to happen? I mean, post Mars and Wrigley's and Cadbury's and Mondelez, where do you see the global competitive landscape?
You know, there certainly has been a lot of movement. It's a very dynamic marketplace today, and it's really, I guess, anyone's guess how much consolidation is going to continue to come. I mean, I think there certainly are a lot of big global players already today, but we continue to see some consolidation.
And you're actively in the market scouting for possible acquisitions. I mean, there was a lot of talk around Nestlé's US candy business, for instance. Is that something that, or an acquisition like that would be something that you would like to consider?
So we are absolutely focused on both organic growth as well as M&A, and as you mentioned earlier this year, we bought the Amplify business, which is known for its Skinny Pop brand. More recently, we made an actual acquisition in the US of a brand called Pirate's Booty, which is a cheese puff, better for you cheese puff type product. So we constantly look at the marketplace and evaluate all the assets that are available and make the best decisions about how we can grow our business. But very critically important, we are focused on growing the business that we have, our core confection business, and as such, not only growing our core brands in our home market, but very, very committed to growing the Hershey's brand in the international markets, especially in India, and of course the Hershey Kisses brand that we're launching now.
I want to go back to your transformation plan and your transformation strategy, and I remember reading that you said that you wanted to put a team in place that wouldn't execute or continue to execute status quo. How difficult is it, you know, to drive change while keeping in mind the boundaries that a brand like Hershey's with a 125-year-old legacy brings with it, to ensure that you continue to stay true to that and yet chart out a new course?
So the way that I think about it is there are certain things in your company and your brands that are tried and true that are never going to change. For us, those are things like the Hershey Company's values around integrity, doing the right thing, high quality, and then at the same time, and the iconic nature of the brands. You know, the fact that Hershey's is synonymous with chocolate and that Hershey's Kisses is synonymous with sharing affection and building connections, and those things won't change. But if I look over the 125-year history of the company, certain things have changed, and you have to continue to evolve to be relevant in the marketplace. And this company has done that, and our brands have done that over the years. and that we need to continue to do that. So I think some of keeping the same and some of evolving. So I look at the classes of trade we participate in and how that has evolved over the years. Consumers' desires and needs have evolved over the years, and we've come out with numerous products in the portfolio, hand to mouth to meet more convenient needs. We offer consumers choice in terms of small pieces of chocolate or bigger pieces. So it's absolutely critical, and I think evolving our company's cultures today is particularly important given how dynamic the marketplace is. You don't have as much time to make a big move. You have to work with agility, you have to be forward thinking to see the changes that are occurring and take advantage of them, and that requires a certain type of leadership.
So given the headroom for growth that you see in emerging markets like India, $7.5 billion in annual sales today, what would international markets contribute to Hershey's global revenues over the next few years?
So without getting into specifics, which we don't typically share at that level, I would say that I am so thrilled with our international business today because it is delivering profitable growth for us. Our teams have done a great job of improving profit margins and at the same time delivering strong top-line growth. So international is contributing very meaningfully to our total company growth algorithm, both on the top line as well as on the bottom line. And that makes us want to focus and invest for growth here even more.
A quick question on the U.S., because we are seeing the U.S. economy grow very, very strongly. What does that mean in terms of discretionary spending? And are you seeing a significant pickup as far as discretionary spending is concerned?
So we are seeing, as we go into the second half of this year, certainly an uptick that we've seen in our retail takeaway, and we are excited about where the economy is, what we're seeing from the consumer, and we think that bodes well for all of us in the industry. But we certainly had anticipated we would have a strong Halloween season, which is big for our business in the U.S., and we're seeing that to date in terms of sell-through at retail. So we're excited about what that could deliver going forward.
A lot of people in the office have asked me to ask you this. When do you bring Wreaths to India?
I think that's going to be up to our general management and leadership team here in India. It is a product that is amazing. It's a $2 billion business. One of our largest, actually it is our largest brand across the portfolio that does amazingly well every time we take it out of market. So I don't know. Who knows what will be next in this marketplace. Right now we're really focused on the Hershey's Kisses launch and making that our biggest launch that we've had here in India with strong support, a great product, and I couldn't be more excited about that.
Well, Michele, we wish you the very best of luck, and thank you very much for joining us on CNBC TV 18 to take us through the plans that you have for India and for Hershey's globally as well.
Thank you.
Well, with that, it is time for us to wrap up this CNBC TV 18 special from all of us here. Goodbye, and many thanks for watching.